Folks, in today's video, we are going to break down 5 stocks to buy before Trump takes office on January 20th. I believe that if you don't take advantage of these 5 stocks, by January 20th, you are going to have massive FOMO. We'll go through number 1, what the stocks are, number 2, why they are set to benefit from Trump, and number 3, strategies to play them. And then we're going to move on to our sponsored segment on Vizsla Silver, ticker symbol VZLA. This is a company that's rapidly carving out its place in the silver mining industry. We'll discuss why you may want to put it on your radar as soon as possible. And as always, folks, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Never get frisky without thinking about your risky, and vice versa. Okay, number 5, Palantir, PLTR. Take a look at this picture from the Army-Navy game that happened the other night that Trump went to, and that Musk went to, and VP-elect Vance went to. Well, you got Trump smiling here, and Palantir advertising in the corner. Folks, Palantir is simply very on brand for the president-elect. American ingenuity, efficiency, cutting out waste, national security, patriotism, you name it, Palantir is on brand. And with Trump heading back into office, we will see an influx of government spending directed toward defense, cybersecurity, and of course a focus on government efficiency with Doge. Areas where Palantir is thriving, areas where Palantir is a natural partner and a natural thriver. Remember, during his first term, Trump dramatically increased the defense budget, and there's every reason to believe a second term would follow a similar trajectory. But beyond defense, Palantir's products align perfectly with Trump's messaging about cutting government waste. For a president who has run on making government work like a business, well, Palantir is easily the go-to solution to making that happen. The fact that Palantir has already deeply embedded itself with key government institutions like the DoD, the Department of Homeland Security, and even the FDA means the foundation for growth under a Trump administration is already there. And Palantir is an American company co-founded by Peter Thiel, an outspoken supporter of the president-elect. But outside of that, you just look at Palantir, the company, you look at how they're scaling their commercial clients quarter after quarter exponentially. You look at their agency contracts, you look at their intelligence apparatus. I mean, it's mind-blowing. But how exactly do you play the stock? Well, we alerted 45 strike calls when they were trading at $5.64 on October 12th of this year, and then they ran to $36.18 at highs a few trading days ago, which was a run of about 541% alert price to highs. Very beautiful, but that's great. What about moving forward? What's the new play here? Well, here's an idea. Take a look at 90 strike calls dating out to an expiration of February 21st, 2025. Those you could snap up right now for $4.75. $4.75 times 100 means that you're buying a contract for $475 right now. If Palantir stock goes up to say $100, well, those calls that you purchased for $475 are going to be worth at least $1,000. If Palantir goes up to $120, your calls are going to be worth at least $3,000, which is a 6x. Palantir, in my view, is a stock that has a lot of tailwinds. It's going to have massive overall momentum, but the way to play it is to get it at a slight breathing cycle, to get it when it's going down 10, 15, 20%, and then ride the wave back upward. Number 4, Tesla. So why is this one going to benefit from Trump? Of course, Musk is also one of the players in this picture here, and he has an incredibly close relationship with the president, meaning his voice will be in the president's ear for many decisions. This is the complete opposite of the current situation where the current sitting U.S. president doesn't even invite Tesla to the EV summits and praises Tesla's competitors. But even outside of that, Tesla and Trump are a pretty good fit. American-made company, American manufacturing. Tesla has gigafactories in Texas, Nevada, churning out EVs and batteries. We got a Fremont factory, and any Trump-era incentives or tax credits to spur U.S. manufacturing could send Tesla's margins and market share even soaring more. Trump has talked extensively about favoring U.S. automakers over any other automakers, and that's another thing Tesla is going to benefit from. But the one thing that I think that a lot of people miss with Tesla is the situation with tariffs. You see, Tesla has factories in China, it has factories in Europe, but it does not rely on foreign factories to create its products that it sells in this market here in the US. It uses its Chinese factories to sell China cars. It uses its European factories to sell Europe cars. And it uses its North American factories to sell North America its cars. So the tariff situation, I mean, Tesla should have minimal impact. In fact, I think they should even do better because foreign automakers that have EVs are likely going to be hit with high tariffs if the Trump administration decides to go that way. But furthermore, whether you're talking about self-driving cars, robotics, other forms of AI, all of the regulatory approvals needed should be streamlined under Trump. Let's talk strategy with the stock. So we alerted 250 strike Tesla calls on September 17th. At the time, they were trading at $22.77, and then at peaks, they hit $180.80. That's a run of about 694% alert price to highs. Very nice play here. Now, keep in mind that the stock itself around the same time frame nearly doubled, but the call options that we alerted went up 694%. And again, that is the power of call options. So what about moving forward? What's the next play on Tesla stock? Pull up Moomoo and you look at the calls offered right now. now, hey, look, personally, I'm expecting a sell-off on Tesla, but an overall trend and a Q1 pump to the upside. So I would go with calls dating out to April expiration to take advantage of that Q1 momentum. For example, you can now snap up April 17th 500 strike calls on Tesla right now for $48.40. And on a pushback, you could probably snap these up at $30 to $35, which gives you even more upside. Number 3, Mara Lovely Mara. So let's start with the obvious. Bitcoin obviously is on fire. It's going to be on fire all 2025 if you read the tea leaves of how pro-crypto this administration is going to be. You even have some analysts coming out and saying that Bitcoin could go up to $500K to $1 million a coin if we do end up getting that Bitcoin strategic reserve. And if you're looking for both a high leverage but also a reasonable way, a core infrastructure way to play Bitcoin's rally, well, Mara is it. Mara is the largest Bitcoin miner in North America, and they're also one of the biggest holders of Bitcoin right after MicroStrategy. Unlike smaller miners struggling to survive in this competitive space, Mara has the scale, partnerships, and resources to thrive in any Bitcoin market, and it has the track record to prove that. And right now, coming into the Trump administration, Mara is sitting on several massive tailwinds. Obviously, Bitcoin going up and pro-crypto administration, but also, Trump's energy policies could make mining operations substantially more profitable. One of the biggest expenses for a crypto miner is the cost of power, to power the air conditioning units in these big, massive server buildings, and also to power the servers themselves. If you can bring energy costs down, well, guess what? Profitability goes up. There's also the macro environment, which is turning more favorable for risk assets as rates drop. Mara has also been aggressively scaling its mining capacity, so they're ready to capitalize on any bigger Bitcoin moves. Let's talk upside. So last time Bitcoin rallied in 2021, it went to 69K, and Mara shot up to nearly $80 a share. Today, it's trading in the $20 to $25 range, but I think over the coming year, Mara is going to be set to multiply its overall share price many times over. So how do you play that? Well, in my view, the low 20s region and below is excellent buying opportunity for Mara. Do not expect a fast return by any means, but also look at all the tailwinds the stock has going for it. If you can just stomach the ups and downs in Mara's teasing cycles, well, you might see massive returns on the other end. We alerted Mara 20 strike calls on September 16th at $2.43, and they ran to $11.55 at highs, which was extreme, but they've now halved again. Now, I believe these calls are going to head back upward before the end of the year and into the first week of next year, but remember, folks, with options, you don't have to hold them endlessly and pointlessly. You can buy them, ride the momentum, and then lock in the profit on the way up, rinse and repeat. And by the way, if you do want our options alerts, you can become an options member today with coupon code SANTA. You get a nice discount and you can join our team. I'll put the link down below. Okay, number 2, Upstart UPST. So this one's very much an underdog. People don't think about this stock, but it's absolutely exploding and it has a lot more upside. Upstart is a fintech company revolutionizing lending through the use of artificial intelligence. Instead of relying solely on traditional credit scores like FICO, Upstart's platform leverages machine learning to evaluate potential borrowers using hundreds of data points. This approach helps lenders assess creditworthiness more accurately and approve loans for people who might otherwise be denied by traditional underwriting standards. Upstart partners with banks and credit unions to make loans more accessible, reduce risk, and deliver a seamless digital experience for both lenders and borrowers. Now, if you look at this company's numbers, whether you're talking about revenue, the overall trend of net income, user growth, partners, everything is massively increasing. And of course, the environment for lending is completely improving quarter after quarter after quarter. Under Trump, we should see increased demand for personal and auto loans. We should see increased partnership expansion with traditional lenders. We should see more AI adoption across the financial sector, which would make Upstart a critical partner for banks, modernizing their process. And all of these reasons are why the stock is seeing massive momentum right now, but also is why you should be considering a position. Just make sure that you're getting in at a good deal. In terms of strategy, Upstart is absolutely exploding, right? But we alerted 60 strike Upstart calls on October 17th at $7.78. They then ran to $28.72, sold off back to $12, and then they are now attempting a break into a new high, which is very nice. But I would say if you're looking to buy now, you'd want to focus on a higher strike price, slightly out of the money, say $90, and then a further out expiration to February or March. Obviously, we did great on the last options alert on Upstart, and we're going to be alerting a new one for members in the coming week. So if you're a member with us, make sure to check on that. And a lot of people say, oh, look, Charlie, come on. Upstart is way too overvalued. Look how much it's run. But okay, really, is it really overvalued? Look at how Upstart ran the last time we had a conducive condition for this industry and for this stock. We aren't even scraping the surface here. We are barely even at previous levels that were considered previously apocalyptic, right? And it's not like this company diluted the stock into the ground. There's a ton of upside here, and a lot of people are sleeping on this stock, and you don't want to sleep on it. Yes, get it at a good deal. Don't chase, but be aware there's a lot more upside here. If you just look at the business fundamentals and the trajectory and what Trump's going to do when he's in office. Okay, number one, SoFi, the Fi of the So, as they say in Southern SoFi land. So why is this guy going to benefit from Trump? Why is the Fi of the So going to benefit? Well, Biden's administration has been an absolute nightmare for SoFi's core refinancing business. The pause on federal loan payments and massive debt forgiveness efforts essentially froze millions of borrowers out of the private refinancing market. Trump's presidency will likely turn all of this around. Trump and the GOP have made it clear that they want to cut back the federal government's role in student loans. In fact, they floated ideas like shutting down the Department of Education or transferring its responsibilities over to the Treasury. What does that mean for SoFi? Well, it means a ton of opportunity. The majority of student loans, nearly 90%, are federal. If Trump and the GOP push to limit federal loan programs, it opens the door wide for private lenders like SoFi. Imagine tapping into a $1.7 trillion market where millions of borrowers could turn to SoFi for better refinancing rates or to fund their education. And it doesn't stop there. In fact, Trump's policies could incentivize private refinancing through simpler repayment plans for competitive rates. This would be a huge win for SoFi, which already has a reputation for helping borrowers refinance at attractive rates. That's why you've seen SoFi build a nice momentum for the last couple of months. But anyways, how do you play this now? So we alerted $10 strike calls on October 18th at $1.14 for SoFi, and those ran to $6.75, which was a run of about 492% alert price to highs. Pretty insane. But with SoFi, the stock now hovering in $15 to $16 regions and set to break deep into the 20s in the coming year, I would take a look at these 22 strike calls dating out to March 21st, 2025. You can now pick those up for 87 cents, which comes out to $87 for 100 shares worth of coverage. That can really make your money go far. If Trump had been reelected in 2020, SoFi stock today would probably be in the $50 to $60 region. But because of the Biden crampdown and also rate trajectory, we are at deep discounts. But the whole game is all changing back to being favorable, and that is why SoFi is an excellent opportunity for a catch-up play as Trump takes office. Anyways, folks, those are the top 5 stocks to buy before Trump takes office. And now it is time for our sponsored segment on ticker symbol VZLA for Vizsla Silver Corp. This is a company that's rapidly carving out its place in the silver mining industry, a company backed by mining Hall of Famers developing what may be one of the largest undeveloped high-grade silver primary deposits in the world. In this segment, we're going to break down why silver is a key commodity to watch, what this company does, and why this stock could be worth taking a look at as soon as possible. Okay, so why silver? Well, obviously silver prices have been surging for years, but the real growth story for 2025 and beyond is silver. Why? Well, several key drivers are fueling silver's momentum. Number one, industrial demand. Silver is critical for technologies like solar panels, electric vehicles, and 5G networks. Every EV contains 15 to 30 grams of silver, and with the EV market projected to grow at an annual 20%, well, demand is skyrocketing. There's also the supply deficit. Silver has been in a supply deficit for 4 consecutive years, and 2024 is expected to see a shortfall of over 215 million ounces. Silver prices are already up around 30% year to date, and some experts believe it could reach $100 an ounce in the coming years. There's also correlation with gold. Historically, silver lags behind gold in bull markets, but then often outperforms once the rally gains momentum. With gold gaining momentum, well, that might mean that silver is prone to do it too soon. In terms of interest rates, when interest rates are easing, silver is set to shine as investors flock to hard assets. Now, what VZLA potentially offers you is a piece of the next silver boom. With silver in a supply deficit, skyrocketing industrial demand, and prices potentially heading to $100 an ounce, there's one company that's positioned to take full advantage of that, and that is Vizsla Silver. You see, Vizsla Silver is focused on developing the Panuco Silver Gold District in Mexico, one of the most promising silver assets globally. Their vision, well, to become the world's largest single-asset silver primary producer. The Panuco project is massive, spanning over 17,000 hectares, and it features multiple high-grade silver and gold veins. With over 375 meters of drilling completed so far, Vizsla is bringing modern exploration to a historically rich, underdeveloped district. But Vizsla isn't just another silver miner, they're executing a strategic dual-track approach here. That means they're not only developing their flagship Panuco district with a fast track to production by 2027, but also aggressively exploring new targets within the district. To date, less than 30% of the known vein structures have been explored. Translation, well, there's potentially enormous untapped upside here. The numbers speak volumes. You see, Vizsla's Panuco project boasts high-grade indicated resources of 511 grams per ton silver equivalent, translating to 156 million ounces. Inferred resources add another 170 million ounces with an all-in sustaining cost of just $9.40 per ounce of silver equivalent. Vizsla is positioned as a low-cost leader. Their preliminary economic assessment highlights a stunning post-tax net present value of $1.1 billion and a lightning fast payback period of just 9 months. Vizsla's Panuco project outshines many industry leaders in terms of grade, scale, and economics. For example, Silvercrest Metals had an NPV of $500 million and an IRR of 40 to 50%. Yet it was acquired for $1.7 billion. Vizsla's numbers are nearly twice as strong, highlighting its enormous upside potential. Leadership matters as well, and Vizsla has an experienced team at the helm. CEO Michael Knert has raised over $800 million in mining ventures, while COO Simon Sirmak has 30 years of experience in mine development. Financially, the company is also on solid ground, with $88 million in cash and zero debt, enough to fund operations through feasibility studies. So why might somebody be interested in buying Vizsla now? VZLA, why? Well, valuation. VZLA trades at a significant discount compared to its peers in the silver mining space. According to analysts, there's a re-rate potential of nearly 191% if Vizsla transitions from an explorer to a producer. Second, timing. We have good timing right now. I mean, with silver prices surging, especially driven by industrial demand in sectors like solar energy, Vizsla has strong leverage to rising metals prices. So the bottom line is this: Viszla Silver Corp, VZLA, may be a unique idea to capitalize on the silver bull market. With one of the largest undeveloped high-grade silver resources in the world, a fast track to production, and a management team with a proven track record, Vizsla is a high-growth stock that may still be incredibly undervalued. That might explain why VZLA has had such a good year so far already. Anyways, folks, I'd say certainly worth doing your due diligence on and putting on your radar. Have a good one, folks. We'll see you in the next video.